So you should think of Bitcoin as an asset. It's like you're on a speeding train going 60 miles an hour and you've got a flywheel spinning 60 RPM. And the pedestrian on flat land is standing on the plane watching the train go by, thinking this is scary. It's going to suck the oxygen out of my lungs. And they're thinking my money isn't an asset because it goes up 0% a year. So they have a different view toward money than the view of someone on the Bitcoin train. The person with $1 million of cash is going to have $1 million of cash in a decade.
Hey guys, welcome back to Everyday Finance. In this video, Michael Saylor discusses Bitcoin and crypto, MicroStrategy, CEO. Michael Saylor, a committed proponent of Bitcoin and the mastermind behind the firm's bold Bitcoin acquisition approach, continues to show resilience in the face of Bitcoin's recent decline below the $100,000 threshold. The recent decline has prompted scrutiny regarding the dynamics of the cryptocurrency market. However, Saylor underscores that Bitcoin's decentralized, immutable, and borderless characteristics position it for long-term resilience, regardless of short-term price fluctuations. Bitcoin operates as a decentralized financial system, managed collaboratively by a worldwide network of participants, which encompasses individual holders, miners, exchanges, businesses, and regulatory bodies. This distributed governance model guarantees that no single entity, including institutional participants such as MicroStrategy, possesses the ability to unilaterally impact or modify Bitcoin's protocol. Saylor emphasizes that the immutability and consensus mechanism of Bitcoin are essential for its long-term viability, ensuring security, resistance to censorship, and adaptability in the face of external challenges. The governance structure of Bitcoin exhibits a notable resilience to unilateral alterations, necessitating widespread global consensus for any protocol modifications. The robustness of this structure ensures the preservation of its core principles, fostering trust and security across various regions and belief systems. Despite the recent decline in price, Saylor maintains that Bitcoin continues to function effectively as a digital store of value. The fluctuations present an opportunity to evaluate Bitcoin's long-term viability, especially in a landscape that is progressively prioritizing digital sovereignty and decentralized financial frameworks. Saylor's perspective is consistent with a wider institutional trend, as MicroStrategy and other significant entities persist in acquiring Bitcoin amid price corrections. The increasing acceptance of Bitcoin by institutions as a treasury asset highlights its potential role in mitigating risks associated with fiat currency devaluation and economic volatility. MicroStrategy has tactically capitalized on market downturns to increase its asset base, underscoring its belief in Bitcoin's future growth potential. In the future, Bitcoin's robustness and governance framework establish it as a fundamental element of the changing financial environment. With the ongoing integration of blockchain and digital assets into traditional finance, the decentralized characteristics and reliability of Bitcoin are expected to draw additional institutional investment, reinforcing its position as a leading store of value in the contemporary digital landscape. And lots of things Michael Saylor discusses, so please watch the video to end, and share this video, and subscribe our channel Everyday Finance. Thanks.
The risk-free rate for Bitcoin, as I just described it to you, 29% over 21 years, about 30%. So the way I look at investments is when you're pitching me an investment idea, I say, well, I've got a lot of money in Bitcoin and I'm expecting about 30% risk-free for the next 20 years. You have to actually pitch me an idea that generates more than 30% plus the risk premium plus the tax efficiency. If you told me here's a thing that'll make me 50% a year, but it was going to be taxable, that might be 40% a year or 35% a year. And I'm like, well, after the risk, it's still not as good as my risk-free rate of 30%. So if you're capitalized on Bitcoin, if you understand it, and if you understand, if you have a long time horizon, if you're going to hold it more than 4 years, you don't care about the volatility. All you care about is the annualized return. Yeah. So, well, the dollar is zero ARR, zero volatility. That is to say, the dollar goes up 0% against itself each year, and the dollar is zero volatility against itself each year. So, if you're on the dollar, you're living in flat land, and you're a stationary person in flat land, a pedestrian in flat land. Bitcoin is going up 60% a year against the dollar. How long? Well, since MicroStrategy made its first investment 4 years ago, it's 60%. But if you stretch back 6, 8, 10 years, I think it's also 60%. So like a decade. But you can measure it back a decade and you see it's going up 60% a year. And it's 60 volatility. It's a 60 vol against the dollar. So you should think of Bitcoin as an asset. It's like you're on a speeding train going 60 miles an hour, and you've got a flywheel spinning 60 RPM. And the pedestrian on flat land is standing on the plane watching the train go by, thinking this is scary. It's going to suck the oxygen out of my lungs. And they're thinking my money isn't an asset because it goes up 0% a year. So they have a different view toward money than the view of someone on the Bitcoin train. The person with $1 million of cash is going to have $1 million of cash in a decade. A person with $1 million of Bitcoin is going to double their capital every 18 months. If they just hold on to it, right? And so they're going to double it once, twice, 3, 4 times at that rate, right?
Bitcoin is at a pivotal point, marked by a period of mid-range trading and heightened selling activity from long-term investors. Recent market data indicates notable changes in BTC ownership patterns as long-term holders participate in profit-taking activities, which are altering supply-demand dynamics and applying downward pressure on the cryptocurrency's price. Recent data from Glassnode reveals a significant decline in the Bitcoin holdings of long-term holders, defined as those who have maintained their BTC for more than 6 months. There is a noticeable trend among investors who are liquidating their positions, as evidenced by the decline in the proportion of Bitcoin held by ultra-long-term holders, which has decreased from 60% to around 50%. The recent redistribution has amplified the impact of short-term holders, contributing to heightened volatility and uncertainty within the market. The sell-offs are notably significant among holders in the 3 to 5 year cohort, with their share declining from a peak of 15.3% to 13.9%. The recent shifts are contributing to a decline in Bitcoin's support levels, while simultaneously impacting its profitability, which currently sits at a modest 19.86% after recent corrections. The absence of robust confidence among long-term investors could exacerbate market instability, particularly if the trend of selling persists. Institutional investors, historically significant contributors to Bitcoin's valuation, have also played a role in the present volatility. The proportion of market share controlled by institutions has decreased from 25% to 16%, reflecting a shift from a strategy of aggressive accumulation to one of strategic divestment. The introduction of Bitcoin spot ETFs has introduced a layer of complexity to the market, initially drawing substantial inflows. However, it is now facing challenges with sell-offs and a decline in market enthusiasm. Bid-ask imbalances have emerged as a significant concern, with headlock data indicating a 50% bid imbalance in segments of the order book, suggesting a market phase characterized by selling pressure. Data from CryptoQuant indicates a concurrent net flow exceeding 22,000 BTC into exchanges, which enhances the available supply and contributes to upward selling pressure. In light of the current challenges, the future direction of Bitcoin is contingent upon multiple variables. The retention of positions by ultra-long-term holders may contribute to market stability. Increased engagement from institutional investors, especially via ETFs, has the potential to elevate demand while alleviating supply-side constraints. A change in market sentiment influenced by macroeconomic factors or a resurgence of bullish activity may mitigate existing challenges. Nonetheless, the current landscape, characterized by increasing supply, declining demand, and waning institutional backing, indicates that Bitcoin is likely to encounter ongoing price challenges in the near term. Market participants ought to exercise prudence, paying close attention to macroeconomic indicators and fundamental shifts within the cryptocurrency landscape to adeptly maneuver through these volatile conditions. Let's get back to Michael Saylor interview.
Howard Marks would say volatility is not risk. Volatility is volatility, right? A merry-go-round, or a carnival ride or a roller coaster is volatile. The risk part is if you fly off the roller coaster, right? If the merry-go-round stops working, etc. So the fundamental risk of Bitcoin is the existential risk of an extinction level event and Bitcoin, right? If space aliens come down and say, we're taking your Bitcoin away from you, right? Then I guess there's risk. If some evil genius finds a way to create a cyber virus that infects and destroys the Bitcoin network instantly, irrevocably, that is the risk. So, but that's kind of like that's the existential risk you take when you get on the airplane. If it crashes, that's the existential risk you take when you cross the street. That's the existential risk you take when you put a piece of food in your mouth. And I say, and you say, well, can you imagine that hurting me? And I say, yeah, if I put poison in the food, you're dead. Okay, so do you trust me? Do you trust the waiter when you put the food in your mouth, right? So yes, there is some risk in life. And the existential risk is that extinction level event. Yeah, I think that's reasonable to say. I mean, I'm not saying 100% of long-term capital becomes Bitcoin. What I'm really saying is long-term capital is like 450 trillion. I think there's 3% entropic lapse. There's 3% loss in that capital every year, either due to inflation or entropy, whether it's a financial asset or it's a physical asset. And that works out to 13 to $15 trillion a year of inefficiency. And that's just people or institutions owning things, and the building falls down, the company fails, right, et cetera. I think I would liken it to, well, I mean, all the water's in the lake and all I got to do is carve a channel and the water's going to flow downhill. And why? Because that's just the law of physics. If I took all your money, like, I don't know, how much of your money do you have stored in a bank in Africa right now, Tom? What percentage
Zero.
of your wealth? What if I took
Shockingly,
it?
zero.
What if I took it all? What if I'm Dr. Evil and I took all your wealth and I moved it into a random bank in Africa? And then I said, hey, April Fool's, Tom, I moved your money here, but here's the key. You can leave it there or you can move it back to the US. Would you leave it there or might you move it back?
I would be moving it back.
Yeah. But so would I have to force you to move it back? I mean, wouldn't there be a natural tendency on your part to move the money to a place where you feel more secure with the money? Like human nature is such that there's a lot of people in the world. Do you know that if you went to China and you gave everybody in China the option to move their money to the US, not all of them would, but a lot would, enough so that the Chinese government makes it illegal to do so.
Dogecoin, Doge, is currently experiencing a consolidation phase after its notable 208% breakout in early November, with trading activity confined to a range of 35 cents to 48 cents. The current phase of diminished volatility has alleviated overbought conditions, fostering a sense of optimism for a possible rally targeting 50 cents. Recent price movements indicate that Doge has fallen below an ascending trend line, which may suggest a potential bearish trend in the near term. The analysis of technical indicators reveals a nuanced perspective, leaning towards cautious optimism. The Relative Strength Index, RSI, having previously attained overbought levels, has now adjusted to approximately 50. Historically, analogous resets, like those observed in March 2024, have often served as indicators for substantial bullish momentum. This indicates that Doge could be positioned for a potential upward trajectory. On-chain analytics from Santiment reinforce this viewpoint, highlighting a significant 31% decrease in the mean dollar invested age over the last 8 weeks. This metric reflects a rise in the movement of previously inactive coins, which typically suggests a resurgence in investor engagement and the possibility of price growth. In light of the current bullish indicators, it is plausible that Dogecoin could retrace to the 32 cents-34 cents range to gather liquidity prior to a more significant upward movement. The assessment of market conditions, particularly liquidity levels and investor sentiment, will play a pivotal role in evaluating the potential for Doge to exceed the 50 cents resistance threshold. A significant breakout above this level may facilitate additional upward movement with the potential to reach new local peaks. The performance of Dogecoin is significantly influenced by market sentiment, especially among retail investors who have traditionally propelled its momentum. Furthermore, the relationship between Doge and major cryptocurrencies like Bitcoin and Ethereum may influence its performance. Robust gains in these leading assets could positively impact altcoins, such as Dogecoin. Nonetheless, the significant volatility and speculative characteristics of Doge necessitate a careful approach for investors, particularly in light of the unpredictable macroeconomic landscape. Potential drivers for Doge's forthcoming trajectory may encompass heightened adoption within payment frameworks, deeper integration into social media channels, or endorsements from prominent figures. Nonetheless, in the absence of these catalysts, ongoing upward momentum is likely to be significantly influenced by overall market conditions and the enthusiasm of retail traders. Currently, Dogecoin is positioned at a pivotal point, with possibilities for either continued consolidation or a breakout contingent upon the evolution of these influencing factors. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance. And we will meet in next video. Thanks.